Hot on the heels of a week that saw a big tech focus once again, with Alphabet really disappointing, sharp declines there. Palantir outperforming heavily once again. But we do leave behind that tech focus and instead shift gears for the week ahead. And we're going to be covering the likes of McDonald's, Deere Co, and Shopify as we look into the latest earnings coming out of the US for the fourth quarter. So first and foremost, let's talk about the wider picture for the week. You can see these are the sort of top names that we're going to see reporting: Coca-Cola, McDonald's, Shopify, Applied Materials, Deere Co, Gilead Sciences, and then the likes of Airbnb and Coinbase, who are smaller. And there are bigger names reporting, but certainly popular with the trading community, certainly with Coinbase as a proxy for crypto. So I mean, essentially, you're looking at the top end of this, and we're talking about two of the sort of biggest names when it comes to essentially junk food, quite frankly. I mean, Coca-Cola and McDonald's, they've been around for a long time. They will be around for a very long time. And so the ability for them to continue to grow is difficult, but key. And certainly it's one that we'll be looking into with the likes of McDonald's, beyond that, Shopify, and then we'll touch on Deere Co. Primarily, this is a mix of companies that I think are interesting from a story perspective to an extent, but generally it's about the chart. And, if I think that they've got an interesting chart, that's probably going to guide me more so than just looking at the company. So we're going to kick off with McDonald's, like I said, a company that's very mature, to say the least. And so the ability to continue to grow is always going to be difficult. It's always going to be tough to really grow at any sort of rapid clip as well. And you can see that here. This is the sort of annual earnings per share metrics. You can see 11.94 for 2023. If you fast forward, there's an expectation to get to 14.59 for 2027. So they are expected to continue to grow at a decent clip, but it is relatively steady in that journey. And you can see in terms of revenues, a similar kind of thing. Outperformance and underperformance, a lot of this has sort of come in line with the sort of pandemic and the deterioration of activity around then. But certainly if we look forward in terms of the sort of quarterly performance, it's interesting to note that we've seen some jitters over the course of 2024 in terms of managing to match market expectations, the likes of which we didn't necessarily see in 2022 for earnings per share, outperforming over the course of both 2022 and 2023 versus estimates. That's not necessarily been the case over the year just gone, and we're of course reporting the fourth quarter now. So will we see similar underperformance this time around? 285 expected on the earnings per share, 645 expected on revenues. But if we're looking in terms of comparative versus a year before, 295 previously came in. So 285, there's an expectation we're going to be in lower than last year. Like I said, the interesting thing by and large is going to be what's happening in terms of the chart. And this is the chart. It's a really interesting one, the weekly time frame for McDonald's. So we're looking back at the lows here in 2015, and you can see time and time again we come into, we did see this big crash back in 2020, of course, with the pandemic, but then we've sort of back on it. One touch, another touch, another touch. We did break below it, but now we've come into that area once again. So there's a good chance that, whilst if you're looking at sort of the wide swings we're seeing here, this would look like a relatively shallow retracement, but it is kind of coming in line with that long-term descending trend line. So there is a possibility we've bottomed out here for McDonald's. We've popped up. We haven't necessarily broken out from this bearish sort of phase that has been playing out of late. We'd get greater confidence with a move up through 296. However, if we're looking from a fib perspective, we would have moved beyond the 76.4 from that perspective. And then from this perspective, if we're looking from a wider degree, you're going to be looking at maybe the 61.8 on that. Yeah, so we've come into a 61.8 on that wider perspective. But I think at the moment, we don't necessarily need to worry about that too much. I would say probably the notable thing here is that we've moved beyond the 76.4, and we've seen a sharp rally. And now the more sort of steady decline that we're seeing here, there we go. So we've popped higher. we're sort of, in my mind, retracing. I think there's a good chance we do rally and we do see this as the bottom. But really, with a move through 296, we get great confidence that that is the case and that we have bottomed out. We haven't necessarily seen that since the peaks that we've seen here in October. We have seen that steady decline, but the rapid run up that we have seen here and the pop that we've seen on Monday as well, I think there's a good chance that the bulls do steadily start to come back into play. Let's get rid of that logo. But it is certainly one that's a tentative one, because of course you can't necessarily just buy it on this trend line, because we have moved past it in the past on a number of occasions, and we've also generally respected it. I think there is a good idea that this is the general mean of travel for the lows. You do have extreme circumstances within that, but that means that soon enough, I think we're going to bottom out. And the question mark is whether we've done it already. And certainly this coming earnings report should hopefully inform us better of that. As I've said in the past, key to this is, you can trade earnings reports in many different ways. One way you can do is position ahead of it and swallow the volatility and hopefully get on the right side of it, but take the risk. The other side of it is that you can trade in the aftermath of it. And certainly if you've got something like this, where you've got a potential bullish setup here and you want to see a sort of pop back up into the prior record highs, if we were to see strong earnings and we rally up through the 296, it gives you that greater confidence that rally is going to come into fruition. So different ways to look at it, but certainly this is starting to look bullish once again after a period of weakness. Let's go on back onto the outlook in terms of earnings. And we can see here that Shopify is up next. Now, it's been through a topsy-turvy period over recent years, but doing incredibly well. This is a company that is sort of allowing people, sort of online merchants, to undertake business. And of course, that's the kind of company that you would hope would be able to continue to expand their offering and expanding alongside sort of AI and things like that. And certainly if you're looking at the sort of annual performance, they've outperformed expectations year on year. And you look at the top end of this chart, these bars, there is a view that by 2027, we're going to be significantly higher than where we are at the moment. 75 cents on the earnings per share at the moment, 257 expected for 2027. So there's an expectation that we are really going to ramp up earnings for this company. Will that be a margin thing, or is that going to be following revenues? Well, $7 billion up to $17 billion, not to the same multiple. So there's certainly a degree of sort of margin expansion expected for this, but certainly higher revenues expected, higher margins expected, and therefore higher earnings per share expected. In terms of the quarterly numbers, we've seen some really big outperformance, and we've seen very consistent outperformance. You can see here, the last time we sort of failed to hit expectations was Q2 of 2022, and we're seeing sort of pretty major outperformance. The caveat to that is when you've got earnings that are absolutely minimal, right, like 0.01 and things like that, doesn't take a lot for you to have an upward surprise in percentage terms of like 100% and things like that, right? But if you've got an earnings per share that is a lot more of a healthy number, it's going to be a lot more difficult. So wouldn't necessarily cling too much on the notion that, sometimes we've seen 125% or 619% outperformance versus expectations. But now we're climbing into the realms of seeing relatively decent earnings per share coming into fruition. And this trend of managing to outperform market expectations certainly is the kind of thing that we want to see when we're looking at a company, certainly if we're looking on the potentially looking on the bullish side of things. So this is the chart on the weekly time frame. And the reason that I brought this up is, first and foremost, we've seen a company that's already traded up at your sort of 175 kind of area, right? But then we saw this massive collapse, and then we've been trying to regain ground since then. Pretty successfully, really. I mean, we got down to the lows of the mid-20s. We're up at 119 now. So it's a very good buy back then. Is it a buy now? Well, look at the daily time frame. We can see here, we saw this we've seen this gradual stepped move higher, and then we've seen pop. Now we're seeing this sort of broadening formation, but essentially consolidation following that gap higher. We haven't necessarily closed the gap. So the question mark here is, are we going to see a breakout through resistance? That comes at 120. I think there's a good chance that we do. And certainly if we look at previous examples of earnings, we've seen major outperformance. Look at the last couple of times that we've seen this report. We've seen this massive gap higher. here back in November. We've seen this big gap higher here in August. The caveat, I guess, is that we've seen these two occasions where we've seen a run up and then we fell, right? So we run up and then just come back in line. But certainly right now we're in a sort of bullish mindset, and we've got a company that time and time again seems to beat expectations. I wouldn't be surprised to see this company push higher. And certainly if we do break through that 120.72, it does give us confidence that we're going to continue on this recovery pathway that has been dominating since the lows that we saw back here in the fourth quarter of 2022. And then finally, let's look at John Deere or Deere Co. Essentially, it's a sort of manufacturing company. There's a big focus on agricultural goods and the like. And I guess there's a feeling in particular that with Donald Trump focusing on the ability to realign the trade of goods with the US and other countries around the world, countries like John Deere, companies like John Deere are going to stand to be in a very good position because of that. Certainly when it comes to the UK, there was a lot of talk about the UK needing to take more agricultural goods, more meat, dairy from the US. So that's a big focus for Donald Trump. We haven't necessarily heard too much of it quite yet. And whilst we have seen a delay in terms of some of these tariffs for the likes of Mexico and Canada, by and large, all that talk's been about fentanyl, and the idea that he wants to see a realignment in terms of the trade balance means that he's probably likely to come back and start trying to push on that rhetoric. And that could help companies like Deere Co. or John Deere as we move forward. Let's look at how they've fared so far. If we look in terms of the annual numbers, by and large, it's sort of expectation of steady growth until we get to 2028. That's when it's expected to really ramp up. In actual fact, 2025 is expected to come in lower than 2024, which was lower than 2023. So we're not necessarily in a great trajectory of late. In terms of revenues, a similar kind of thing. 2025 is expected to be the bottom. Here is the quarterly report. You can see here that we have managed to beat expectations pretty much every single time since the fourth quarter of 2022. So 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters in a row where we've seen them outperform market expectations. So that does provide us with a bit of confidence that they're probably likely to do the same. 312 expected for Q1 of 2025. Well, Q1 of 2024 was 623. So certainly from a comparative sense, not necessarily in a great position. But can they beat expectations, and what does the chart look like? This, again, is another interesting chart because if we look at the chart here, let's just get it up on full screen. This is the monthly time frame, right? So what we've seen here is this massive ramp up here in 2020 into 2021, and then we've seen prices sort of chopping and flatlining, and now we're starting to see a break towards the upside. The weekly time frame highlights exactly that move, the move up through this 450 mark, signaling the potential for us to have exited this big choppy range bound sort of messy period. You know, it was nice at the back end. It started to get range bound, but this is a bit of a mess, quite frankly. And now we're exiting that. So we retraced into the 61.8. We've pushed higher, retraced, sort of shadow retracements, probably a 38.2, and then pushed sharply higher, retraced into the 76.4 fib. And now we're moving higher. We've managed to push into record highs once again. So this stock, to me, looks like it's broken out, and it looks like we're expecting to see more of the same. Certainly, there's a perception that whilst you're looking at the expectation for earnings and revenues in the years ahead, that is built on premises that might change under Donald Trump when it comes to the price of underlying goods that might benefit them. And when it comes to the demand picture for US exports, you know, these are the kind of things that should benefit the company. So we're pulling back at the moment. I wouldn't necessarily expect to see this last super long, but ultimately it depends on how the earnings come out. But as long as we remain above 403, this pullback looks like another potential retracement before the bulls come back into play. The hourly time frame shows you that we have sort of generally rolled over. We haven't necessarily taken out this 458 level quite yet, and if we do, then it's going to point towards that wider retracement coming into play. But if we see that retracement, or even if we don't, we break up through the 484, I think it's likely that soon enough the bulls come back into play following this breakout. And certainly keep an eye on the agricultural sector, and this could be a potential benefactor if we do see significant moves undertaken with Donald Trump now at the helm. That's it for today. Make sure to check out all of our content as we go forward at Scope Markets. Thanks a lot. My name is Josh Mahony, Chief Market Analyst. Make sure to like and subscribe. Thank you.